media just insisting on a single one-sided narrative, and the people still questioning this narrative, there can never be a middle road for this. People can never talk to each other in a civilized manner, in a respectful manner, and find a solution. So I think the left and the right, or the Democrats and the Republicans, they're drifting further and further apart. And maybe that's one of the core problems in the US right now. They have two different versions of reality. It's very difficult to reconcile that, right?
Absolutely. Yeah, we wrote about that. I mean, extreme polarization in the US is a huge issue. And, you know, in Switzerland, what's kind of cool in Switzerland is that if you compare the Swiss system, the political system of direct democracy with the democratic system in the US, it's actually in its root, the constitution is very similar. You know, it's almost like, I think part of what Switzerland did in its constitution was based on what the US had done. Our constitution was in 1849, so it was, or was it 1848? I always get that number wrong. But, very similar in, you know, separation of power, limiting power of government. You know, that's some of the core thinking is, you know, these different pillars of government, you know, from executive, judicial, and legislative, and making sure that government cannot become too powerful. And in Switzerland, it even goes so far that we don't have one president, right? We have what we call 7 councillors, and there is one president, but he actually changes every year out of those 7 Bundesräte, councillors, federal councils. And that leads to a situation where, first of all, our government cannot do as easily what they want to, but a really key element is that we have every 3 to 4 months, we have votes on specific issues. And that slows down and limits the power of government, and it also has led to a situation where in Switzerland I feel we have a tradition and a culture of talking politics still. You know, it's not forbidden at the dinner table or at a social event to talk politics, but it's starting to be harder, right? So we're starting to become a bit more like that, where polarization is becoming an issue. That became very obvious during the pandemic, where suddenly everyone thought, you know, oh, we're all going to die, and you should all be vaccinated, and, you know, a lot of people, and it became difficult to discuss. That was very un-Swiss. Usually in Switzerland, especially before these votes, it's fun, and it's like part of our DNA to you know, be in the restaurant or in the family and fighting over arguing and then having a beer, right? That's part of the Swiss DNA, is to disagree, you know, to argue and disagree, and it's fun. And that is, for me, the most important part of actually having a real democracy, because in that process, you start, you know, understanding the arguments of both sides, and in the end, you have to make this decision, and it's not always easy. There's, you know, there's always trade-offs and compromises involved. Then you have to put it in your ballot, and that tradition is something which we still have. Therefore, I think we're less progressed in that polarization element. We also have in Switzerland and Europe, I think also, we have less of a wealth gap. You know, the Gini coefficient in the US is really bad, and that plays a huge role in the US in that polarization as well.
And don't you think in Switzerland it is different? Because yes, people still care, and they care that much that they talk about it at the dinner table, but it's because they have their voices heard directly.
Absolutely.
They actually have a vote and a say. In most countries, it's not like that.
No, I think that's the key point. If you don't really, if basically the political class and the elite class kind of decouples from the man in the street and thinks they know everything better, and the man in the street is an idiot, that's when democracy falls apart. And I think we have quite a bit of that. You know, I think there's an academic elitist group more and more that does not really think that democracy works, you know, because the average guy, the average Joe doesn't really know. And that's wrong. It's especially if you have that tradition of arguing, you know, you want to respect every man's voice and common sense, And generally, you want to probably give more weight to the common guy and his common sense than the professor in his ivory tower. And yeah, that is lost. I mean, it's in danger of being lost in the West, I think.
And the economic inequality, of course. It just, so many people in the U.S. feel like the game is rigged. There's no point.
And
why
it is.
vote? Why care?
And it is rigged. I mean, the game is rigged, absolutely, in a sense that if you look at the system, it's become, and now, you know, when I use this word, I don't use it lightly because it has connotations, but it's fascist. Fascism originally, when it started in Italy with Mussolini, it was a collusion of large corporation and large government, where basically they kind of, if you were part of the club, you know, you did well, and who cares about everyone else? Let's make things happen here, and let's make it look as if it was a democracy, but it's not really. And what you see in the U.S., you have more and more of that. You know, what we saw during the pandemic was really the power of the pharmaceutical lobbying groups in the pharmaceutical industry. I think played a huge role. At this point in geopolitics, I think the weapons industry has a huge influence on what's happening, and there you have that situation where government and big corporations, big tech, big industry are colluding, and that is where I see the biggest danger of losing democracy, when basically you don't really have a real democracy anymore, because everything in the media, everything becomes propaganda. In the US, it's now two sides of the propaganda. So it's very hard to get a discussion going. It's very hard to actually, even just openly have an argumentation and seek truth, right? Because that's what dialogue is, ultimately seeking truth. It's understanding the other person's view to then start really getting a fuller picture. And when that goes away, you don't really have an informed decision at the poll, at the voting booth.
Do you think the fiscal and monetary policy also plays a role in marginalizing certain parts of the population? They pay the highest price of inflation, for example.
Yeah, absolutely. I think, to some degree, and this is obviously, I mean, this is often told, but I think at the center it's true, is that the monetary inflation and fiscal inflation, but especially monetary inflation, really played into the hands of those that were able to invest. So, I mean, if you look at what happened back in 2008, and that's where also, going back, when you had Occupy Wall Street movements, for example, had to do with the fact that the banks were bailed out, the money, the monetary inflation that was created did not really find its way into the real economy. So the average citizen didn't really benefit from that. And that's a big part of that wealth gap, which is real. And so the game, to some degree, has become rigged, right? So, I mean, we often, once in a while, when we talk, we laugh about Orwell, the Animals Farm. And we say, I think even in the report, I think we even use that sentence, the pigs are at it again, I think we say.
Yeah.
And that's that. It's absolutely that type of pattern that today is playing a role. And the thing that's disappointing or disconcerting is that it's real, it's rigged, but the solutions that people think are the solutions for them are not. They go towards more help from the state, more centralism. So it's very easy for the left narrative, in a sense, or the socialist narrative, to say, yeah, we're going to take care of you. You're actually, by creating this growing welfare state, by creating more and more money and liquidity, that is not really helping to have a rising tide, right, where all boats go up. It's actually, as the tide comes down, the weakest will be hurt the most, and that's where we are today. It's not a good situation if you don't have a certain amount of wealth, if you don't have a certain job. And the average person's life is becoming harder and harder with inflation. Yeah.
And it's not sustainable, right? Throwing money at the problem all the time. It's not really a...
I think it is. I mean, that's the thing, right? I mean, maybe the MMT crowd will be right in the end. And there's some that say, it's no problem. We've got the dollar and we'll just continue more deficits and everything. And I don't know how long this will go on, but the reason we wrote this report is that we think it won't go on that long. I think, we're already now seeing the change of tides, and those are big sea changes. It's not something that, has occurred without building up over many years, that, now suddenly we don't have negative interest rates anymore, or zero interest rates. That period is over, and therefore we're in a different world today.
And that happened quickly, huh?
Happened quickly.
It was a 180, very quick.
Yeah.
And they definitely didn't have the effect that the central bankers were hoping. Inflation is still not under control. It's nowhere near 2%.
No, that's a big part of what we talk about in the report, is really the fact that we think that inflation is going to be sticky for all kinds of reasons. It's right now you already see that, the economy is actually doing better than most would expect. Inflation has come down a bit. We're now at 4%. But it's still high, right? It's still elevated. I mean, if you think about the fact that only 2 years ago inflation was like 1%, mm-hmm. Now being at 4 to 6% in the U.S., that's 4 times to 6 times more. That's big. And bringing it down, I think it's going to be similarly hard to bring it down without really killing the markets and the economy to the 2%, as hard as it was to bring it up to 2% for many years, right? They were trying to get it up to 2% for many years, and that failed. Only really the pandemic allowed inflation to return to some degree because of those fiscal inputs there.
So what's your outlook now? I mean, assuming that inflation is going to stick around for a while, and easy money is out of the question for a little while longer at least, we're stuck in this in-between space. What should an investor think at this point?
Yeah, so our position is that the most probable scenario is one of stagflation, which means that you have an economy that, stagnates, and you have elevated inflation, and that kind of state is always one that is kind of like this up and down movement also in markets. And that's there's like no clear trends, right? So that's a difficult period, and I think we expect that to continue for at least next 12 to 24 months. We'll see. The thing we try to warn about in the report is that, this would be a scenario where there's ways to invest in that, there's ways to make money. There's also some themes, where there's opportunities out there. However, the chances that we actually run into a more dismal scenario. So the lowest probability in our book is the one where, we go back into Goldilocks mode. We don't see that at all. The most probable is one of stagflation, where we kind of muddle through, and hopefully over time things improve again. But the danger on the geopolitical front, the danger in terms of the economy, in terms of a credit crisis, for example, the difficulty for central banks to really manage this current phase, they're not really able to manage it. They can influence it, but they're not in control. That is a myth. The central banks are not engineers. They're maybe artists to some degree. So it's the danger of things going the other way is high enough. The probability is high enough that we kind of warn people to get ready for the potential of a scenario that is uglier. That could even include something like an extended war, where it's not just contained in the Ukraine, but where things somehow contaminate other regions.
What other possible triggers could you foresee for a deeper correction, let's say, or a longer downturn?
Yeah, for me, it's really that's why geopolitics is quite important, and it's at this point. I mean, one example is Taiwan. A lot of people are talking about Taiwan, where for many years, we were very dependent on Taiwan with the chip production. We're now working hard to emancipate ourselves from Taiwan in a sense of, excuse me, bringing chip production, to the West. There's, for example, some lines being built now in Arizona. Holland is ramping up, and so now as that happens, obviously for Taiwan that is bad news, right? Because Taiwan, once we don't need them anymore, the West will probably be less interested in defending them or keeping them from the Chinese influence. And you see that already. I think the Taiwanese are aware of that. And I'm not so concerned. So basically, I don't think that China is going to invade. I don't think they're going to take military action. I think they're smart enough to know that all they have to do is wait. Because ultimately, as Taiwan becomes less, and this sounds cynical, but that's the way the world works, is as Taiwan becomes less important for the West, as the U.S. Doesn't really need the chips from Taiwan anymore, they will not defend Taiwan. And then the question is, will Taiwan be able to defend itself against the Chinese? Will they even want to? Because they will see that their American friends are maybe not as friendly as they used to be anymore. So my view is that you're going to see a transition even in Taiwan itself, where maybe the political makeup of the country will start changing and people may become more pro-Chinese or less pro-West, which means that you'll have more of a scenario down the road that you might compare it with what happened in Hong Kong, right, where the Chinese kind of just now have Taiwan back. And that's if we look at scenarios, that's our most probable scenario. Now, if I was wrong, which is absolutely possible, right, I might be completely off my subject here. If China were to attack Taiwan, imagine now we have a situation where there's all kinds of question marks. That kind of situation would put the economy and would put the markets under instant stress, right? And there's quite a few of those kinds of black swans out there, and we talk about that in the report.
It's a huge difference if Taiwan is another Crimea or another Ukraine.
Correct.
And the market reaction as well.
Absolutely.
But you're tending towards the Crimea scenario, right? You think it will probably...
I'm trying to stay optimistic. I have to say, I'm hoping that things, obviously, I have 3 kids. I don't want more war. We've got enough war in the Ukraine right now. I would like to see peace as soon as possible. It's upsetting to see how many young men, I have a son and 2 daughters, and there's a lot of sons dying right now in Ukraine and on both sides. And in the media, it's almost like it reminds you of what happened during Vietnam, kind of, it just becomes a normalcy, kind of. And what's strange today is that even, parties that used to be peace parties, leftist parties in Germany, and now suddenly they're the warmongers. And it's a very strange situation where emotionally they've been able to be charged in a mode where they think it's now about the free world against the unfree world. And again, I invite everyone to look into the mirror. We have to be more self-critical in the West, and we should start or stop pointing the fingers at this censorship in China and Russia, where in fact, we have quite a bit of censorship here in the West. If we do that, if we find back to our free market principles, our principles of a sovereign individual, I'm very optimistic for the West, and I'm hoping that, you're seeing some of that return already. If you watch some of the things going on, for example, some of the talks, or even Twitter with Elon Musk, you're starting to get other voices again, which already is starting to create less of a homogenous narrative. And that's a good start. I hope that continues.
Well, definitely, especially in view of the election, you need to have more voices being heard.
Correct.
So at least people are more informed,
right,
if they agree or disagree. I think you have a lot of that in Switzerland, at least.
I would hope that we have more diversity. And when I say that, I mean diversity of thought, of arguments, of ideas, of capabilities. I don't really care so much about the color of the skin or the size and shape of your eyes. That's become much too much of a focal point because of all this woke ideology. If it's an ideology, I'm having a hard time to understand what it actually is. But it's actually, in my view, saying one thing but leading to another. It's not leading to more inclusion. It's not leading to more acceptance of diversity. It's actually, in my view, doing the opposite. And I would hope that we get back onto to a path of diversity where what counts is your character and what you're about, your substance, not some factors that are superficial, like bald-headed or color of your hair or whatever. Yeah.
These social divisions have serious implications and consequences, don't they, though? Not just politically, but I think also economically to some extent, because they do drive policy. This idea that people are defined by superficial characteristics like this. And this division keeps bringing people further and further apart. So where do you see this whole thing ending up?
So that's the third, right? We talked about three. So we had, on the one hand, I think we talk about the part where central banking policy, monetary fiscal policy, debt is one big factor and driving force. The next is geopolitics, and then there's also politics nationally, and the societal gyrations that we're in right now, or not gyrations, but tensions and the polarization, and there. Usually everything in nature is like a pendulum, right? It comes and goes in cycles. And right now we're in a phase where there's a lot of tension. Personally, I think that the U.S., with its political system, with some of the traditions and culture that I'm hoping is still there, I still have the hope that things could actually improve very quickly with the right leadership. So that is my hope. And that would be the best outcome. If there was leadership in the U.S. that would be more uniting. Joe Biden started off on saying he would be uniting. He's been the opposite. Trump, in my view as well, would not be uniting. But there's a few others out there now, and I'm not sure who to vote, or if I could vote, and I can't vote. I'm not American, but. If I could vote, who would I vote for? My hope would be that it would be someone that would, have a personality, have a style that would be understanding, statesmanlike. I would love someone like Ronald Reagan that was, also had some humor, and also someone that would, bring Americans back onto the question of what makes them American. And right now, I don't think. I'm not sure Americans can answer that question right now.
Oh. Move on to the conclusions of the report. I think the main theme there is there's a lot of uncertainty and very low visibility. How do you survive that?
So, investment, you mean in terms of investments?
Yeah.
Now? Yeah, so it is true. It's never easy, right? Investing has never been easy. You never had the crystal ball, so there was always uncertainty and so on. And at this point, I think you kind of have to, at least that's how we approach this new era, is that we're operating on an assumption of stagflation, which you could also translate in terms of financial markets as like a range-bound market situation, right? Where you're kind of in a funnel and you'll have ups and downs,
Sideways,
but it's so which means, for example, that passive investing, we don't think passive investing will work. We think you'll have to be a bit more active. That doesn't mean that you have to be a trader, a day trader, but you probably have to really focus on certain themes and be a bit more active. A key ingredient of what we do is downside protection. So we think you have to stay in the markets. You still need to stay in equity investments, maybe a bit more alternatives and private equity. But while you do that, you should also have some downside protection. So I think today it's a bit harder for an individual, a non-professional, to actually manage his wealth, where, in the past you could really, passive investing was quite successful. Buying a few ETFs and just kind of going along for the ride was actually worked quite well, and it was very difficult to outperform that even as an investment manager. Now I think we're in a different time period. I think that requires a bit more systematic and attentive management. If you do this as a hobby and you only look into your portfolio every few weeks, I think that could be dangerous now with the way the world works. And so that's one element, I think, is that risk management has become very, very important. And surviving requires risk management, and it requires risk management in different ways, right? When it comes to equity, for example, you could use put options or futures, but Also, I think precious metals, very important. Gold, I think, physical assets, real assets, I think are becoming more important. We talk about it in the report that, you know, where now maybe the past 40 years it was the era of financials. Now we're heading more into an era where I think tangibles will do relatively better. And
why is that?
Well, part of it is really inflation, right? I mean, it's really inflation and interest rates, and the fact that the period also currently is that where, you know, if you really had a crisis, physical real assets are, I think, just better place to be. You know, if I think sometimes I think back to some of the stories my mom tells me from, I mean, she grew up in Frankfurt during the war, during the Second World War. And one of the things her grandfather, apparently, I never met the man, but I know many things that he said. One of the things he said is you want to own land, because even if a bomb falls on it, you know, you still own it. so it's, you know, stories like that. It's just, I think during crises, it's good to have physically, you know, allocated real assets that have some form of intrinsic value. Either they have cash flow, you know, cash generating value, or they have intrinsic value like gold. Because during this phase that we're headed into, the turbulences we'll see on the currency front, on the fiat currency and managed financials front is going to be, has the potential of going sour and really creating losses. And then there's inflation, you know, where if you hold your everything in financial assets, I see some dangers of loss and deterioration of your wealth.
Do you think the recent banking crisis in the U.S. and a bit in Switzerland too, do you think that had an impact?
A bit in Switzerland.
A bit?
That's the understatement, yeah.
Do you think that made an impact? People rethinking and shifting to tangible assets?
I'm not sure tangible, but what I do see more is, you know, we've been, I mean, that's part of what we've been doing for clients for many years now, is really making sure that their custodial structural setup is solid. That element, even this year we've been discussing that a few times, is, you know, it's really important that your the custody setup that you have is, first of all, in a jurisdiction where, you know, there's rule of law and there's not too much debt. Secondly, at the institutional level, you're working with a bank that is not, doesn't have a business model that has high exposure to creditor obligations, you know, where banks with, you know, it's not the largest banks that are the safest. That's just not true. At some point, you know, if the system gets into trouble, the size of that bank will not be a benefit. It's if a bank is highly exposed or active in investment banking and commercial type lending, that model has a risk to it. So there are two at that institutional level for our clients who want a nest egg, who want a bank, a safe bank, you know, that has a long tradition of solidity. And those are private banks that actually don't do lending business or investment banking. Those are banks in Switzerland that, you know, were created for the protection and the safekeeping of wealth and the managing of wealth. And that's where, that's another angle which I think is very important for this period ahead. And then there's also the contractual level. I think in the U.S. in particular, it's very important that clients look at the small print of their institution. It's not the biggest brand names and the siziest, the biggest institutions that are necessarily safe. They should really take a close look at what the contract says. And if in doubt, you know, look for institutions in the U.S. or elsewhere that have a safer balance sheet. And I think that is hugely important today.
So it seems we're at this point that it's not just what you own, it's how you own it.
Absolutely.
Correct?
Yeah.
And when you talk about structural integrity and this attention to this kind of detail, why is it so important now, especially?
Because of the debt. You know, it's really going back to what we said before. I think debt matters. I really think that the mountains of public debt and private debt that we have today create all kinds of imbalances and exposure that ultimately could quickly create a credit crisis, which would inflict the banks, and we've already seeing the beginning of that, right, in the U.S. And there, it's interesting to see how especially smaller and regional banks are obviously in a really difficult spot. Things have calmed down a bit, but I don't think it's over. I think what you've seen for many years was that banks basically were able to take advantage of low interest rates in the short term, basically getting money for free and lending it out for the longer term at higher rates. Now with an inverted yield curve, that whole business model is not working anymore. And so there, again, you're in a new era also with regard to banking. And not all bankers are actually old enough or experienced enough to actually have ever dealt with that kind of scenario. So I think we could see more failing banks, and with the state of public finances in the U.S., in Europe, a more systemic problem could erupt at any point. We saw back in 2012 in Europe during the credit crisis how quickly things can unfold, and not wanting to, no pun intended, is that how you say it in English? The Greeks obviously were in the middle of that once again.
Always.
Always. And those things unfold so quickly, and it's like people forget how quickly governments and large institutions can get into trouble. So it's really important to remember that.
But even this time in the U.S., I'm sure we can find a relevant graph, but the outflows from and the withdrawals from the banks, it's the closest we've come to a bank run in quite some time, and everybody was awfully calm about it, don't you think?
It was, well, not here in Switzerland with Credit Suisse. That was people were quite upset, and but the outflows were huge, and it's not just that people actually, when you talk of a bank run, people think that everyone's coming and wants their cash. It's actually that they left currencies, right?
Yeah.
So they invested, and there too, there was a lot of inflow into all kinds of money market funds and everything. But ultimately, they fled the exposure, the cash exposure that they have with the banks, and that already creates problems for banks. So.
Are you expecting, were you expecting a larger impact when the first and the second bank folded in the U.S.?
I don't know. It's so hard. It was like last time in 2008, like I didn't expect Lehman Brothers. What we did see, and back then also in 2007, we started writing about, these imbalances. We founded, back then it was called Global Gold. During that period, because we said, we had some clients, they said, we'd really like to have a solution outside of the banking system. And we were like, yeah, maybe, back then I thought, oh, it's not that bad. But as things went on, we approached 2008, we were starting to get really concerned about a systemic situation. But where it would hit, was impossible to say. It was just clear that things were running out, were becoming imbalanced. Back then, it was mainly with the mortgage-backed securities and the collateral. What was it called? The collateralized debt obligations, yes. The CDOs, and everything. So it was. It was a time when we were starting to get concerned, and out of that, we created the Global Gold, which is now BFI Bullion. That was a great move. It was a good thing to do. And today, again, I have that same feeling that, and it's not just a feeling. It's like, I guess it's an educated feeling that things are really, in a situation where our hope is that the bubble, kind of deflates with a hiss, right? With a slow, silent hiss. Danger of a pop does exist. And where it would pop, it's so hard to say. It could be on the geopolitical front. It could be a speech by the Fed. It could be another pandemic. I hope not. But, it's
another bank.
At another bank. And in the U.S., there are rumblings still where there are some smaller regional banks that are in trouble. And we'll see.
You mentioned precious metals and BFI Bullion. Do you think this is the precise right time for someone who hasn't thought of it before to start considering adding, allocating?
Yeah, if you don't have gold and maybe silver at this point, you should take the opportunity, because in my view the price based on where we are today over the next 2 years is going to go up. We started investing in gold in like 2001 or 2, and it was like $300, so it was a great time. And I personally, we at BFI, we have a lot of gold, and I don't think I'm a gold bug. I just like the fact that as a store of value, and as a money, gold is not managed by central bankers. It's limited in its creation. You have to mine it. Where obviously there's some similarities to Bitcoin. Some people compare it to gold. I think it's something very different, but it has that similarity in terms of being limited in supply, and that creates a protection of value. Gold has been around for many years, and in crises in the past, it's proven to be a good hedge, a good insurance. So I really see it as an insurance policy. And yes, I think you should start thinking about owning some of it and then adding more over time.
You have a lot of experience in the gold market in general. And there were some issues with it. There are some gaps that you identified in that market. There were some inefficiencies and some things that could be improved. I think that's where aXedras came in, right? Want to elaborate on that a bit?
So aXedras, it was a combination of things that kind of led to the creation of aXedras. It was on the one hand some inefficiencies. It was, if you think about the precious metals industry, a few years back, we actually, with one of the vaults we work with, you still had a what is that vodka? Where you weigh things. What is that in English?
The scale?
A scale, yeah. Where you still had, with the scale that where you would put the weights in it. Yeah. So, and it was very precise, but it just to think of, it's still a very traditional and very paper-heavy industry. If you think about the fact that today still a lot of importance is given to paper certificates. So
like physical
paper certificates. It's like, that's probably the easiest to forge, right? So it's like so. There were pain points. There were certain inefficiencies. With my background, my first real job after doing, dishwashing and gas stations and ski instruction, my first real job was with back then Anderson Consulting, which became Accenture, and corporate reengineering was my big passion. I really like that, and so if coming from that mindset of organizing, standardizing, improving, processes, creating flow balance and everything, and then seeing how things were done in the precious metals industry, that was something which, I always thought there would be a lot of potential to improve this and digitalize. Now, what really triggered me to look more into that was the arrival of blockchain or distributed ledger technology. And initially, I started really reading into that, because for global gold, today BFI Bullion, I was thinking, we have to innovate and do things differently. And looking into blockchain, initially I actually was disillusioned, because there was, from what I saw, there was a lack of privacy. If you think of how Bitcoin works, it's actually a network of databases or ledgers that all synchronize so that the truth is like everywhere. Which means that there's no privacy at all. If you once you know the wallet or the address of a user, then you basically see everything he does if you know what you're doing. And so I was like thinking, for precious metals or financial purposes, not sure. But then over time, really learned more, and also met with Florian Herzog, who is a founder of Deon Digital, and he kind of convinced me of the fact that you can combine the benefits of, immutability, transparency, safety, speed, with confidentiality. And that's when I go, oh, that's really interesting, because now you can create a decentralized system of ledgers where you own and control your data. And now I'm probably already going too far in terms of getting too technical, but basically, so there was, part of it was the need or the recognition that there's pain points and efficiencies that could be created. The other part was the recognition of, technology. And I started then really getting interested because I thought for BFI Bullion that kind of solution could be interesting. And that's how the whole project kind of started. Today it's really, aXedras has become, you could call it a network. It's less, the blockchain is not that important. What the business model is, it's a way for the participants in the industry, the mines, the aggregators, the refiners, the banks, the dealers, to interact over a digital standard where each bar has its attributes digitally reflected as a digital twin, plus its chain of custody, plus its provenance, where did the gold come from. And as it moves on, you don't have to enter a simple example, if today or in the past, if you sent a batch of gold bars from a vault to a bank, there would be a shipping document which would go along, and then the bank, if there was no interface, and very often there was no interface type solution, so no API, automated interface, what would happen is that all the data that you entered here, someone would be there with the pencil, would check off, so yeah, all the bars are here, and then someone else would enter all those bars, and every time there's a loss of the past, there's also errors that are made on the data entry. It's a lot of work. It's obviously not efficient. And depending on whom you're working with, the information you will get will be different, right? Someone might enter the bar numbers, someone might not, right? So there was a system of intransparency which made it very difficult to get to the information of a product. And product integrity, everyone's talking about responsibility and transparency and so on. But if you want to create that, you have to start with the integrity of the product in a sense of making sure that the information that you have about the product, you can look at it and you have information that is trustworthy. And you can then make your own educated decision whether you want to buy it, sell it or not. But in the end, if you don't have the information, it's very hard to have a fluid and effective industry or ecosystem. Because ultimately then it will always depend on, I'll do business with you, Nat, but anyone else I don't really trust, right? So now you're very limited in the way you can do business. Even though, there's this opportunity over here, that would be a really cool product, but I'm not sure, who is it? I'll just do this, right? So in terms of the industry innovating, becoming more healthy, really creating new products and better products and services, I think that kind of digital standard is really, really important.
And more transparent products, right?
Absolutely.
So you can back up your own ESG claims, for example.
Everyone talks ESG, but actually if you look under the hood, it's a bureaucratic monster which ultimately provides very little information. That kind of, if there's funds out there, now that say they're ESG funds, and there's, even precious metals funds that say, we have green gold and we have gold that comes from the best sources and it's all CO2 neutral or whatever, all these claims, right? But then you go, well, can I see, what kind of gold, what is it, right? But there's not that transparency. And now with aXedras, you can actually have funds, and there's several large funds now. We actually created a fund as well, where you can actually look at each of the bars and you see what its attributes are, what the bar number is, what the weight is, what the format is, all the basic stuff, but then also what the chain of custody is and where the gold came from. So that's where then I think real product integrity and transparency comes in. And what I like about the way we structure the system is that we did it in a way where, however, you get this transparency, but transparency doesn't mean a loss of confidentiality. So the system is not a system that now acts like a quasi-regulator and a be good type system. It's depending on what your business model is, you can use it. And if I transact with you, so if I send gold to you, we will both see the information of that transaction, but not everyone else. What everyone else will see ultimately is the information of that bar with regard to its attributes, so that you can send it on to someone else, and the next person would then see the chain of custody.
No, that it's just the greater efficiency it creates. It makes life easier for everyone, right?
Yeah.
And it all started because you wanted to solve a problem that you had in your own business, and it turned out to be an industry-wide solution.
We've been really fortunate, and it's there's also a lot of luck. I mean, ultimately, originally the idea I think was a great one, but it was also one where I knew it would be really, really difficult because industry platforms are so hard to create because ultimately you have to get everyone to go along with it. And the biggest benefits of the system, and we're still not there, but the traction is huge. We've got all the household, refiners, Valcambi, Metalor, Argorereos, everyone is on board. We have some of the large mines are on board. The World Gold Council has invested in aXedras. So we're on a really good track. But ultimately the ecosystem, what you said, the ease and the efficiencies only really are created if the industry comes together and goes, let's do this. And yeah, we still have to work on that a bit. And then it's, if the industry does, it's a huge opportunity for the precious metals industry because there's a lot of regulatory pressures coming down. You just mentioned ESG, that is one angle. It's more and more the fact that, auditors, regulators expect you to be able to say, like, where does this material come from? What is this product? Have you done proper, KYA, know your asset and so on. Doing that efficiently is very difficult if you have to go and shuffle the papers and find the records and stuff.
That's proper detective work at some point.
Yeah, that's like forensic work.
But overall, do you think the end customer, the end investor, is also going to feel the direct benefit from this?
I think that's a really good question. It's right now I see the biggest benefit as a first step within the industry itself, so in the B2B angle. But down the road, I see really awesome use cases also for the end investor. The one example, right now it's because of all these money laundering rules. It's actually really difficult to, let's say you had some gold in your backyard and you dug it up and you came over and said, Frank, here's some gold from my yard. Could you guys buy this or put it in storage for us? Now we'd be like, oh, Nat, yeah, we'd love to do that. We need to, can you document like the background and is this really this gold bar? So getting your gold, if it's not part of the banking system or not part of that regulated system, into the system or taking it out of the system, that alone is a bit of an issue. Now, with aXedras, it's very easy. There's more and more what we call security feature technology. So one example, SICPA, which is the company that does not just the Swiss, but also the Swiss notes, the bank notes.
Oh.
They create them with all kinds of, they have all those security features in them, like the watermark and I don't know what, the biometric stuff, and I don't know what. So that company has created, they call it a tracer, but basically it's like a, we have these vignettes on our cars, where you stick it on your car, and if you take it away, that sticker, it breaks. But you need it in order to be on the Autobahns in Switzerland. It's the same principle that there too, that tracer, if you took it away, it would break. So as long as it's on that gold bar, and it comes with a QR code, now we know exactly that was really that gold bar, right? It's just the gold bar's attributes per se, the most important attributes, the bar number, the brand, the producer, and all that. That already gives you goes, but it could be a forgery, right? It could be a different bar with the same attributes. So the tracer really makes sure that this is the bar that you, Nat, if you took it from the vault, you took this with you, and now you're bringing it back. No problem, right? We know, okay, we've known you, we've identified you in the past. Now you took your bar out on a joyride, and now you're bringing it back. It's still the same. It's still the same bar. So that's just one example where that kind of ledger can also help end investors, and there's many other examples.
And do you think maybe it's a very good way to ensure there's enough trust and enough transparency in the industry by the industry, because you know what the pain points are and you know where the issues are, instead of having a regulator that probably has no idea, with a very heavy hand, that could destroy so much of what was built throughout this time. It's better to self-regulate, at least to some extent, and because you know what's efficient and what's not, right?
I agree. Yeah, I don't know if you saw the conversation we had recently with David Tate. David Tate's the CEO of the World Gold Council, and I 100% share his vision of, they call it at the World Gold Council, they call it gold 24/7. Basically a gold that is more, that is is fungible, it's more accessible, it comes with the trust from an industry that, is doing its homework and also has built the technology to self-regulate to some degree and to incentivize the players to be transparent and keep track of where things come from and so on. And what I like about our system, again, is that, every region will be a bit different, but you now know, right? There's transparency in a sense of you have the information and it's trustworthy information. And you need that kind of foundation to then go to that next level where, that's where I'm excited, is I would really like to see gold almost play more of that currency role that it could play. Where everyone could own gold very efficiently and, could go on its app and, you've got PayPal and you've got your credit card and then there's like the gold coin or whatever, and it's a gold coin that you can trust as much as you trust any fiat currency, and maybe you could trust it even more.
Well, it's going to be backed by something.
Exactly. And so that would be, that would then create a situation where gold plays a bigger role. And in my view, gold can play a bigger role for society just by putting some shackles on governments. The biggest danger or the biggest enemy of freedom is governments that become too powerful, too autocratic, and too centralist. And part of that power that they have today, obviously, is based on fiat currency, that they can create and solve any problem, right? And that creates all kinds of issues downstream.
And this, in combination with the debt issue and with the extreme amount of debt that's been accumulated, and I think the desperation that you can see building up in many governments. You talk about financial repression measures as a possible risk going forward.
Yeah.
Do you think a combination of the measure that we've already seen plus a digital dollar, for example, could be the ultimate threat?